Hi and welcome to a weekly outlook. This is Kim speaking on Monday the 4th of December. So before I get on and look at the technicals, just run through the fundamentals as ever using Forex Factory's calendar here because it's probably one of the better ones out there. Quite straightforward. Already seen the construction PMI out for today. That was the major figure to look for today. It came out at 9:30 and came out positive. A marginal boost to the pound there. Looking in tomorrow morning, well, through the Asian session, we've got the current accounts and retail sales in Australia, followed by at 3:30 a.m. the Reserve Bank of Australia's rate statement. Now, it's not expected to see any big changes here, but we may well see some volatility in the Aussie dollar. It does tend to get a bit of a kicker around both the retail sales and the Reserve Bank of Australia statement. So cash rate's expected to stay the same, so it's more what's said in the statement. Leading through to the early UK session and London session. 9:30 got services PMI. Do get some good moves around that. The services is the biggest part of the UK GDP, so it's very important. We did have positive numbers last two events actually slightly positive. 55.6 last time, only expecting 55.2. Anything more than that may well give the pound a bit of a boost. Then following through trade balance Canada, no movement there likely much through to US afternoon, and we've got the non-manufacturing, i.e. the services PMI for the US. It moves a lot less, to be fair, on this figure, but we may see a bit of dollar action around that, a bit of volatility around there, but it's not a big mover. Moving on to Wednesday, and Australia has it first there again with the GDP figure due out. These do tend to come out somewhere in line, although just looking at numbers here, not that in line than one might expect. But so volatility around 12:30 certainly for sure on Wednesday. ADP non-farm payrolls then in the afternoon, Wednesday afternoon. So nothing else Wednesday morning. Wednesday afternoon non-farm payrolls ADP number, so it's the first figure coming out. Does create a bit of volatility, nothing like the proper one that comes in on the Friday. And then the Bank of Canada's rate statement coming out in the afternoon there. It's expected to be 1%. Now, they have effectively only put it back to where it was before oil slipped away. Oil's holding up pretty well now. There's no reason to give any more help or anything, and it's whether or not there's discussion or statements or suggestion that any further increases may come through. There have been some reasonable numbers coming out from Canada. So employment data came through reasonably well last Friday. May get some volatility kicking around here at 3 p.m. Wednesday. Okay, certainly if there's a surprise interest rate. Finally, almost finally then, Thursday, we've not too much significance there. Trade balance of Australian dollar may not affect it too much at all. Unemployment claims, it's just a weekly report. Sometimes it gives it a bit more kicker when we've got non-farms coming out because people are getting a sort of a bit of flavour what may happen. We've got Draghi speaking at 4 p.m. on Thursday. Again, may get a bit of volatility here. I believe is due to hold press conference at the Bank of International Settlements here. So may get a bit of volatility around 4 o'clock on Thursday. Leading into Friday, and we've got the manufacturing and production data coming out at 9:30. Now, it does will be interesting to see what's happening there. Production's been falling. Manufacturing is still doing okay, but we'll see how that works through. In fact, the last three numbers have beaten expectations, so it's expected to come in lower though on this occasion. And then, of course, non-farm payrolls at 1:30. I would imagine on Friday most of the price action will be in the morning, and then we'll very early morning, and then we'll sit there waiting for those numbers to come out at 1:30. Later that day, we've got the consumer sentiment. Now, I've flashed through these pretty quickly, but more importantly, we're seeing a lot of volatility come the comments and news. We've got Brexit being negotiated, and the Eurogroup meetings have been running, so there's plenty to be coming out from there. The Brexit discussions are seeing the market jump up and down 30-40 pips at a time. The other thing to be aware of is the tax agreement, the US tax bill still to run through. I think it's the Senate that goes through next. So that's this week. So again, expect some volatility, which is not on this list. Be as wary as you can and look for what clues you can. But Brexit, it does give the pound a lot of risk in terms with these current, certainly in this current week. So let's go and look at the risk and the not risk. Well, the euro, bit of a hanging man's at the end of last week. We do have potential downside here that may be selling off towards the weekly 8 here at some point, potentially at least. It from a daily perspective, well, it's not making things particularly clear. We've got a weekly pivot and a gap above us, which the markets may still want, but we've still got the monthly pivot below us. Now, the very fact that it hasn't filled that gap from this morning session may suggest weakness there. It's the euro's not being able to break back above its 60.21. It struggled all day with that. It looks, as I said, at the moment, well, it could be on at this stage for a trip back to that monthly pivot sitting around about 118.06. So 118, quite a key number anyway. It'll be interesting to see how it reacts off that. It's got the daily 21 sitting around that sort of level as well. If it gets down there before it's done anything else, would be surprised with that prior low there for some sort of bounce to come. And if it hasn't hit the pivot at that point, the weekly pivot, there's the target. Okay, maybe more. So it's the euro, the pound. Now the pound's been, as I say, fluctuating. Goodness, it's even since I last looked at it. Let's just have a look at the weeklies here. Weeklies, it's still in that sort of expansive move. It's pushed up, it's broken and closed above the weekly trend line. I say weekly trend line, but the trend line across these highs here. It's not the weekly trend line, it's just a trend line. Now it's closed above that last week. There is some potential for a bit more continuation to the upside, of course. I say a bit more, but maybe more than a bit more. But it's sitting around its regression channel average here. It's just chopped off that a little bit, pushed through it late last week. Now we've tested today the weekly pivot. Still got a monthly pivot below, and still got a good probability of that being hit. So I won't be overly shocked to see price running into that, maybe through it. It's maybe not so stable. It's got nothing else with it, so we'll just see how it is. One thing, as I've already said, is the pound could be particularly volatile, and when I talk about that, if I only could get the words out, I'll show you it on a chart. There we go. Volatility kicking through this morning, 11 o'clock, comments made, boom. Coming up at 15:50, BBC reported that there wouldn't be a comment made or no meeting today or statements made today. Boom, off it gets sold very quickly, and it gets sold and it comes back to where it basically was beforehand to a certain degree quite often. But as I said, it's a risky market, and these markets are quite we're seeing some decent sized moves here in terms of just push this on here. Let's just look at that 5 minutes there. Oh goodness, did I say 50 pips? That's 95 pips. And well, that's going to be about 50 pips on the other side there. So some big old movements there. So be wary of the pound. Okay, as we run through the week. Regardless, be wary of the pound. Okay, dollar yen, but it's a bit more. Let's have a look at this. A bit more consolidated. Has spent a lot of time in a tight old range on these weeklies. As you can see, with just over that 114 area we'd been to a few weeks ago. Looked all bullish. Put this sort of spinning top candle in on the dailies there, and then it's sort of pushed up a little bit, gapped up, and not really managed again to come down and close the gap. So there are some gaps below us. We've run through the monthly pivot already, running at 34. I'm just wary of these gaps above. Maybe just as the euro's looking weak, that we may see some weakness in this dollar yen push up and continue. There's a possibility for sure. However, with both of them, they've got weekly pivots, opposing sides, of course. But as this is the dollar yen, it's the downside and the euro dollar to the upside. So both got weekly pivots to be sort of chasing after yet. if it closes like this and starts selling off tomorrow, I would be looking to try and trade part of that through and maybe take advantage of the gap fill. I'll just show you the gap fill in the shorter time frames if I can. There we go, 60-minute time frame here. You see the gap that's unfilled there, which, as I said, just like the euro, I'm going to pull this back to the euro. It's just not managed to get back anywhere near filling that gap. Not a massive gap. It nearly did it this morning. But certainly at this stage, you see where the euro is pointing south, dollar yen. If it comes and fills here quickly enough, yep, there we go. So it's in the 60-minute point of view, the higher highs coming through there. Okay, a bit of divergence possibly on the shorter time frames, but either way, it's not looking great at the moment. But there's the potential on both these markets to turn. The reason I'm pulling them together is they've both got relatively small little news around both of them, and they may just have a chance of moving less affected. Aussie dollar, got lots of news out this week on the Aussie dollar. Well, some key news on the Aussie dollar. I was looking at this earlier. The last 2 weeks, or 3 weeks, it's basically been range bound. It's got the potential to run back up today, or this week even, towards that weekly. Well, it will just run, if it runs into last week's highs, it's going to run into the weekly 8 and just possibly bounce off that yet again. It may just run through it a little bit as a 50 moving average, a couple of other averages. Who knows? We may just see some of the catalyst this week for a bit more of a movement, but seriously, from a weekly point of view, to me, it still looks like it's got potential downside. There's marginally, I will argue that no, it hasn't made higher lows here on the dailies at all. So it's sitting there around the weekly. It's done the daily tick tick, and it could, if it starts rolling back towards that daily 500, could roll beyond that. And finally, the Canadian dollar. Finally, on the currency pairs, that is the Canadian dollar. You can see what it's done here. But this, before we go on to the dailies, let's have a look at the weeklies. Now, weeklies, funny old move. Just finding a bit of support on the lower bands there, which may allow it to run upwards or back in, but it's very range bound on the weekly. Even with all the sort of news, the OPEC meetings last week, it did pretty well, or sold off pretty well, I should say, relatively against the dollar. Dollar strength coming all the way through there, 4 days. Then Friday it gave it all the way back again, and straight down. They say the bulls climb the stairs and the bears jump out the windows, and certainly that's a good example of such. Anyway, for now, it's popped into the daily 50 then, so we've seen a bit of a bounce. There is a weekly pivot up higher, and as I said, there's from a weekly perspective, there is the potential of it pushing up maybe towards the prior highs there from a weekly perspective. So upper bands there, but the range is getting tighter and tighter. At some point it's going to give, but there's no massively significant news for the Canadian dollar there, unless oil was to move significantly, or the US dollar really to push through on Friday. So we'll have to wait and see on that one. So that's it. That's the markets there. Now, I did say, and I've said this a couple of weeks, don't sell the S&Ps. Now, some people probably thought it would have been a good thing to sell on one day, but yet again, weeklies pushed up, and we've even made new highs again here on the dailies. And now Friday, it looked like it started rolling there. Some fake news, I may add, but the tax bill looks like it's going to possibly drive it in further if it gets through the Senate, or Congress, whichever way around it is. That's going to push it most likely further. So there seems little to be stopping it. So go with, don't go against, he says, possibly. Although there's lovely divergence here. No. Anyway, that's that. And finally, I will look at gold, because we do talk about gold in our trading room quite a bit. So let's just have a look at the bigger picture of gold. And, well, it's been consolidated on a weekly. It's a weekly picture here. Look how consolidated it's been, struggling, and it's just in this very, very tight range. Chances are it may just well stay there. You start coming down to the dailies here, very tight range relatively. There are some points to be had amongst that, but it's bitty. It's not clear that it's range trading as opposed to trying to trade any specific trend at the moment. So that pretty much sums it up for the week. So I'll wish you a great one. I will be back next Monday on one of these. Bye for now.
you.